The war on the financial system. Is it starting? I happen to think so. We saw this nickel squeeze, which I didn't think too much of it, but new data is coming out, and it looks like this could start a massive war on the financial system. We'll get into that right now. Justin, right now what's happening is, so we all know nickel squeeze from like 20,000 to 100,000. Then there was a forced settlement where they said, LME basically said, okay, here, everyone, you're gonna take a haircut and you're gonna just close your position for 50,000. Sorry, we're not sorry. Now it's coming out, and JP Morgan looks like they're short nickel. So Cubby, one of the greatest traders in the world right now, is tweeting, and he was basically saying, well, markets open back up on March 16th. JP Morgan has their pants down, and all of him and his hedge fund buddies, they said, we're going to squeeze the fuck out of JP Morgan. Justin, how could this, I mean, we could say just how skewed the financial system is, because if JP Morgan is short and they had a phone call with LME, which is the reason there was that 50% haircut for settlement, I mean, just we could get into that. Or what are your thoughts on this just from right now?
Yeah, so I mean, the first thing that comes back to mind is, it's going to sound like a broken record: counterparty risk, collateral problem. So for all the viewers who hear about the words like COMEX, paper markets, LME, the DTCC, dark pools, synthetic shares, etc., it's all the same nonsense that comes up right here. But the thing about JP Morgan is that, like, so the first thing I think about this is that Bear Stearns back in the day was short a hell of a lot on silver. And when they failed in 2008, JP Morgan took it over. And I don't know if it was a shotgun marriage or not, but the point is that the silver short rolled up into JP Morgan, and they've been perpetually short since then. As far as nickel goes, on the LME, my thoughts are this: the only way this pricing mechanism works is that if there's confidence in the market, that is, if I have a contract for nickel, if I have a contract for golds, whatever, that I can actually take physical delivery. Now, I might not want to take physical delivery, I might want to cash settle, but nonetheless, I can take physical delivery. So that's interesting. And from JP Morgan's perspective, they might say, listen, we've got a strategy, we're good at our strategy because we can control prices, whatever. We're not supposed to say that part, but who cares? Just between us girls, right? Anyways, so the point is, JP Morgan might be hedging their position just in case they ever got short on, let's say, a commodity, nickel in this case, but that nickel might have been sourced from Russia. And so this is where you have the introduction of counterparty risk, although typically I thought we'd see it in the banking system coming through on balance sheets. I guess it's kind of is the same thing. But if JP Morgan can't get the nickel that they were otherwise planning on getting to satisfy their short position, then all of a sudden their exposure point is much greater due to the fact that they thought they had this, supply to offset a short, but that supply, the counterparty, has been knocked offline due to geopolitical factors, etc. So anyways, Josh, I think that's particularly interesting. And at the end of the day, remember when Apex turned off the buy button for GME, LME turned off the buy button, and then forced the sell button, I suppose, for nickel. I don't know how long JP Morgan can get away with this, and this is why I think back to a civil war. So Josh, here's a question for you, or here's how I think about it. Curious to hear your thoughts on this. JP Morgan and the banks, these guys are powerful. And they have, a lot of chutzpah behind them. I'm not trying to say that's not the case. But so do Cubby. So do all the other billionaires that are out there. I don't necessarily mean to think one or two billionaires could take on Chase. But I do note that this is, I think, maybe the outer winds of the coming storm of a civil war in the financial system. And that's my question to you, Josh, is that if it's not bank versus bank, perhaps it's billionaire versus bank to get things kicked off.
Yeah, this is what I'm looking at right now. So today's Monday, March 14th, and trading will resume March 16th. What is the buy pressure going to be? Because if they all know that JP Morgan's short, and well, if they're a forced seller, they have a lot of money, why not take a long position, because they're probably good for it. But what happens if there's just massive buying pressure? Let's say hedge funds just pile in. Well, this could increase inflation a ton. Let's say nickel goes to not 100,000, but let's say it goes to $1 million. If a nickel's at $1 million, battery prices are going to be through the roof. Cars are going to increase. It would just cause mayhem. And what's going to happen to JP Morgan? Are they going to have to force liquefy positions? Their long positions are going to go down. Their short positions are going to go up. This could cause just. Then what's going to happen to GME land? And that's what me and Justin are more focused on, because margin requirements are going to increase. People are not going to want massive stakes on margin when they see their buddy JP Morgan getting squeezed. And how many people are doing work with JP Morgan? Is there a chance that JP Morgan goes bust from this, Justin?
Yeah, and I guess, Josh, to your point, what's interesting about JP Morgan is that I don't actually know if they can go bust. And here's what I mean by that. Yeah, of course they become insolvent. Yes, they can blow through all their owners' equity.
Someone would have said that about Bear Stearns as well.
Oh yeah, and Bear Stearns, like, you get into this realm of, was it GSIFI, globally systemic financially, or whatever it's too big to fail.
The GSIB banks that, like, the reason why Justin Thing doesn't know why if they can go bust is because they're too big to fail. We hear this all the time. The government's going to bail them out, and we don't know how corrupt. Me and Justin believe the everything is wildly corrupt, as we're both much more libertarian leaning. I don't want to speak for Justin, but myself, I am very much libertarian leaning, and I do not trust the government at all. If all other banks don't want to work with JP Morgan anymore, they will go bust, and that is a fact. But I think JP Morgan has enough power and enough sway to where they will get a bailout if one is needed. If JP Morgan does go bust, I can assure you Citadel will follow, though.
Yeah, so like here's the thing that I think about is that it is true people might know, let's say JP Morgan sitting on a bag of shit. Bank of America, also rumored to have a very large civil short position, might be sitting on a bag of shit. But at the same time too, this is where it gets really interesting because other banks should be the ones to blow the whistle on that. But they know, listen, if we blow the whistle on this, we are actually going to just blow the whistle on ourselves, because blowing up JP Morgan, which is what we should do, this is what what rational do. This is what otherwise is the proper procedure. If we do that, we also know our own positions are going to get blown up because we don't know our exposure, maybe through counterparty risk. We don't know our exposure through whatever else is going on here. And so this is where it gets back into the billionaire question, where I really don't see the banks doing it until right now. It's going to boil down to this: the risk of not calling bullshit by one bank on another bank is probably perceived as being less risky than calling bullshit on another bank.
As of now. Yes, absolutely. And we see a lot of signs cracking. We see Repo failed to deliver starting to spike, and this is a massive it's not as high as they were during 2008 or during the COVID crisis, but they're rising. And we're seeing them rising right now, which is not good. And it is not good at all, because this is basically saying if me and Justin are doing a repo agreement, then I am putting up collateral, he's given cash. One of us failed to deliver. I either fail to give him the collateral back or he fails to give me the cash back. In the repo market, let's say if I have that collateral, if I'm lending the collateral to Justin, that collateral and the cash could be used by 20 different entities at once. It just takes one of those entities to fail to deliver for all of these entities to come to take a haircut on that. But the important thing is it only shows the one, because there's the financial system's so intertwined. I could show you many examples of how this is done. Jeff Snyder, George Gammon. Yeah. All you really need to know at surface level is if these failed to delivers break, it's not me and Justin failing to deliver, it's the 20 other people who are intertwined in our transaction that are taking a hit.
And they might, the other, let's say 19 people, they might not even realize
they have no clue.
They've got exposure. And then imagine for those 19 people who are going to get exposed, imagine what's 19 times 19, whatever, like a lot, 400 or whatever, right? Imagine all those people who say, well, wait a minute, I'm pretty certain I don't have any direct exposure to nickel, but do I have exposure to people who have exposure to nickel? And this is where you have the seizing up of the stuff. So I think that's particularly interesting. And this is what I want to get back to, the COMEX and, LME and JP Morgan or whatever. Like, if one of these things does ultimately fail, and whether it's in the context of commodities with oil or the metals or GME squeezing or Bed Bath or whatever, right? I really suspect that one of the next milestones to get through is the Fed printing out bank reserves and using the failing entity.
Turning bank reserves into legal tender, physical, spendable units of currency in the real economy. And to finally wrap this up, if let's say JP Morgan is short a lot of nickel and there's a massive short squeeze on nickel, they could probably, we'll probably see them shut down trading many more times. They might do that 10-day suspended trading. They might force sell again. But until that, if they could just continuously put more and more buy pressure, which is going to short the bejeebus out of these guys until this cascading effect will go on to all these other firms. And I think if there is a massive nickel squeeze, I think that could be the catalyst that breaks the back on the GME.
Yeah, Here's what's going to boil down to: the people who want to squeeze the billionaires, as long as they're willing to take physical delivery and have the means, and to actually like store the stuff. See, only way that J.P. Morgan can push back against this is by basically selling more paper short. And the only reason they can sell more short is that if the LME are coming, because in order to sell it short, they have to get the exchange to play ball, which means the exchange has to be willing to go out on margin, because the exchange will be the bag holder if J.P. Morgan can't deliver. Mm-hmm. And so as long as it's the same thing with the GME saga or whatever, right? As long as they can continue to print a synthetic in lieu of the original, and people let these things trade on a fungible one-to-one basis, JP Morgan's going to win. But if people demand delivery, and if suddenly JP Morgan can't source the delivery, and then if the central counterparty LME in this case can't source final delivery, that's when it's going to blow up. And I think that might be enough of a gun to tell LME to say, like, listen, Chase, we'll let you sell more, but you have no margin. Like, you have to pledge maybe like 120% of whatever it is. So I mean, like, we will backstop it or whatever, right? We'll take that risk, but this is such a high risk. You can't give us a trust me, bro. Like, no, we need solid collateral.
And then the same thing would happen. Then our friends at the DTCC and our ETF bag holder, they'll see this and be like, if this is happening with JP Morgan, this could happen with Citadel. These guys, they may be much bigger and powerful than us, and they're bringing our wealth up massively. But if we go bust, then what's the point? We're screwed. So this is where I think I'm very curious to see what happens with nickel opening up Wednesday, the 16th, and if there's massive buying pressure. If there is, I will be a very happy man. So thank you very much. We will see you guys on the next one.